Keith Webb from Rand Merchant Bank. I sit within the infrastructure finance team, so we have a strong focus on the project financing, but I focus specifically on the ICT investments. So we also do what we call on-balance sheet lending as well. What I found difficult is to do a full comparison between sub-Saharan Africa and the rest of the world, because we are very much focused as RMB on sub-Saharan Africa. But what I wanted to do is just in opening paint the landscape that we see. And I will go traditional and focus on what we see as the primary mover in this market is the GSM players. But across sub-Saharan Africa, we still see a lot of potential growth in the mobile sector as the primary access mechanism for, as I say, access to ICT. But what we do see happening is a move away from a voice play only, so just a telcos, and more onto the convergence side, or converged side. And then more into the data space. And what we do find is that accessing data on your mobile device is very network intensive, and as a consequence, the GSM operators are going to be investing a lot in their networks to support data. What we're also finding on the continent is increasing competition, and Airtel, Bharti Airtel, is certainly one of the key drivers of this that we see. We see lowering average revenue per user, ARPU, as the competition comes through, and therefore lower margins. So I think in terms of landscape, we think the operators are thinking quite carefully about how they invest in their infrastructure to greater effect. And certainly themes that we see and opportunities for investment, and maybe this is no surprise, is in shared infrastructure, things like sharing of towers, GSM towers, sharing of fiber backhaul from towers or undersea cables. Opportunities such as call centers, network management, outsourcing, and then also the data storage, outsourcing data storage from the big GSM players. So that to me is landscape. The question that was posed to me originally, which was, where the investment returns good, or what sort of investment returns are there, how do they compare internationally? Also very difficult to answer, because I'll give you an investment banker answer, which is it depends. And maybe the way to think about this is to think about what constraints there are in the sector that affect returns. And particularly in this outsourcing theme that I'm talking about. And the first constraint to returns is an overinvestment in capacity. Now this might sound funny on a continent where we believe that there is a need for more capacity, but let me give you an example. If you were to build 2 highways from Joburg to Durban, that's not exactly the most efficient way or the way to maximize returns. It doesn't make sense. So if we have 10 undersea cables connecting Africa, I'd say you're going to find your returns on those investments lower. So one's got to be quite mindful, and we saw this certainly in America and the cross-Atlantic cables. The bottom fell out of the market because there was an overinvestment in capacity and no returns were made. So that's going to be one constraint. And we might think that that's far away for now, but if I look at the doubling, quintupling, etc. of undersea cable capacity happening right now, much more than that, I'd say you might suffer lower returns. The second thing, in terms of constraints, is the inability to share this infrastructure that has already been created. And for instance, MTN and Vodacom in South Africa have pretty much rolled out tower for tower right next to each other. That if you were a tower provider and you were to buy those towers, I'd expect lower returns because you cannot share that infrastructure. They're sitting right next to each other. So that's one thing to think about. Is that infrastructure shareable? Because that's how you're going to get returns. And then the third point, people underplay this. People always think that they're going to put a pile of capital together, they're going to support a tower player, for instance, and they're going to buy towers from MTN, Vodacom, Orange, Millicom, etc., and they're going to have a good business. But unless that player can actually find operational efficiencies in the business, there's no argument for an MTN or Vodacom party to actually sell those towers. So when we look at investing, certainly more from the debt side, in, let's say, tower players or fiber players, we look for track record, ability to actually sweat the asset and get operational efficiency. So those are my 3 sort of constraints which affect returns. So I won't answer the question, it's 15%. it depends, and obviously Africa is a vast continent, and it's going to depend by country as well. Look, I think those are very different businesses from sort of the area that I focused on. You think about content, if you think about people who invest in SAP systems, they tend to be big corporates, government, etc., and we would absolutely lend money to them for those sort of investments. But standalone, to invest in a company which runs a SAP system for its own sake, that's not an easily bankable deal. It doesn't fit the sort of the standard bankability criteria. Content, selling movies, etc., and I think Hollywood's a case in point. That's very much an equity play. You win big. It's not, from a bank point of view, we look for contracted revenues, for stable revenue streams. Very difficult when it comes to content, websites, internet, except to the extent that it's connected to a corporate. Share some thoughts on the PPP side of things, because ICT isn't an obvious PPP-able sector, if you will. But what we have seen is certain state entities, government entities, who leverage their spend in ICT to actually create networks which are then PPP-able, shareable. And some of the reason why they do that is to actually drive network development in underserved areas. So it's certainly a nascent theme, but it's certainly something, if you look at the big cities in South Africa, that's very much on the cards. And I've engaged in various Nigerian state-owned entities or government entities that are also looking at this. So it's a good catalyst for investment in the sector, and so one shouldn't sniff at it. The one issue that we do find with this type of investment is the development of a network which is very specific to that entity. And how does one then get one's head around banking it? But we think there's sufficient commonality that there is a way to do that. And maybe another issue that one needs to think about in terms of investing in this, with this type of a sponsor, is commercializing it. It's already well to have the infrastructure, but what we typically find is that because that infrastructure has been set up to service a government entity, it's not necessarily thought about how it's going to actually sell these services to the private sector. So there's still a lot of growth in the sector. Across sub-Saharan Africa, we see a lot more. We sum up north of $20 billion capex still required to grow the networks across sub-Saharan Africa. So we think it's quite an exciting sector. The question of how to spur investment and encourage investment into the sector, I would say it almost is happening anyway, and that's just driven by pure market forces. But I do like the idea of government supporting through being a big user of services and actually driving networks out into more difficult to serve areas which are not necessarily economically viable. So that we'd certainly support. Policy limitations, I can't say that they're unlike the rail sector, maybe in ICT it tends to be a little bit more, we've seen a bit more coherent in terms of regulatory environment. It doesn't mean to say that there aren't challenges with regulators, but we certainly, from a bank point of view, don't see it as a risk factor to investing in Africa. It's licensing and spectrum sort of issues. I guess that's a challenge to come through. So as a whole, as I say, from an investment bank point of view, we like the sector and we certainly see a lot more growth in it.
Doing business in Africa, you can't afford to be without Africa Investor.